Well, the debt crisis in Greece has weighed on markets around the world, elevating concerns about a potential second credit crisis. Tony Cerscenzi is the senior vice president at PIMCO. He joins us now for his take on what you call, Tony, essentially the risk factor du jour when we talk about risks of sovereign debt. Looking at the creditworthiness of countries now rather than corporations, that's a focus. A lasting concern here, Tony?
Well, lasting in the sense that it'll be around for a few years. Think like a household that has a lot of debt. Households have been deleveraging for quite some time, and the public sector has taken over for the private sector, or we could say that the public sector has had to use its balance sheet to help the balance sheet of the private sector, and it'll, of course, will be quite a while for these countries to rid themselves of the debt, or at least to bring the debt levels down to what's considered respectable. And what's considered respectable is a debt-to-GDP ratio of 60%. In other words, that means the amount of debt that a country has relative to its gross domestic product. And it's 60% is the normal guideline worldwide for what's acceptable, and many countries going above that.
One of the things that you've been writing about and talking about lately is that you're seeing investors chasing after bonds of countries that are in trouble rather than those that are recovering. The yields are much more attractive, but is this because there's a perceived notion that there will be a bailout for Greece, there will be bailouts for countries that have put themselves in this situation?
The situation in Europe is quite complex because the countries that are in the European Monetary Union had agreed to certain guidelines on fiscal policy. Greece and others didn't, Portugal and Spain, and the EMU, the European Monetary Union, is in a tough position because if it gives in to Greece, it may have to give in to others who have trouble, and how will it then impose discipline on the countries that are within it, and how will the world treat those countries with the kind of respect that they should?
This is fascinating. This is the exact dilemma the United States really had to grapple with with Lehman Brothers. It's exactly what we saw. Come to the rescue of Bear Stearns, don't rescue Lehman Brothers. Moral hazard at the center of all of this, isn't it? It's comparable.
That's right. It is a moral hazard issue for the European Monetary Union, and why they haven't stepped up just yet, and they're letting it get to the brink, perhaps to put pressure, of course, on Greece to take actions on its own. But herein is a difficult situation because the European nations then are interjecting political considerations into the equation. We know that Greece would rather, on its own, make decisions on fiscal matters and not have them imposed by other nations. And this is a problem that the emerging markets have gone through over the last couple of decades, the IMF imposing disciplinary rules on fiscal policy for those nations that have borrowed from the IMF. And so it's the same kind of political issue here.
PIMCO is the largest fixed income manager in the world. How are you advising your clients right now? Get into this risky European debt or stay far away?
PIMCO is more careful about European credits right now and being very selective and scrutinizing the actions taken by governments. And we're looking more at countries that are moving up on the income scale, moving in a positive direction in terms of debt to GDP ratios. A country like Brazil is one we'd be positive on, or even China. You can bet in the swaps market on its currency. These are creditor nations that have money in the bank, so to speak, and improving debt to GDP dynamics. And so, like a banker who lends money, you'd rather give to those who have improving income prospects and better debt situations.
What about the bond market in general, Tony? What's it telling you about recovery right now?
Yields for many months in the Treasury market haven't moved all that much, but yields on corporate bonds and credits like those, so-called spread products, have moved downward. The markets are anticipating a recovery that may not be as vigorous as expected, so we want to be careful and selective about corporate credits, but the rate environment is upward trending somewhat, but nothing drastic because the economy is growing very slowly.
Tony Cerscenzi joining us from PIMCO. Thanks for your time.
Thanks so much.